Hello, I'm Chris Grassick and welcome to Profitable Guidance. In this episode, we're going to be talking about money management for small business. Now, let's get straight into it. Now, my tip number one, we basically want to be treating your business, your small business, as though it's a large corporation, as though you're managing a massive company listed on the stock exchange. And I'm talking about having serious, regular meetings with yourself as though you're having a board meeting and discussing and strategizing how you're going to be managing your capital, managing your resource allocation. And what I mean by that, your capital, your resource allocation, your scarce resources being cash and your assets and how you're going to deploy that. So another part of that is managing money for small business is managing time for small business. It's ultimately time is money, where you invest your time and your deep seated focus is what's going to produce and yield that fruit. That's going to be an asset allocation. It's going to produce an income. It's going to produce a yield. It may not work, but where you invest that time and resources during these meetings, how you allocate your time, your money is going to actually determine your success along that way. Managing money for small business is imperative, and it may not seem like a big deal, but these from anywhere from those small amounts that you're dealing with, if it's a subscription, something that's laying dormant that you're not really necessarily utilizing, all the way up to large amounts, we need to be respectful for everything. Hence why my number one tip is treat your small business as though you're a big listed company. You're going to have the frequency of the meetings. You're going to have an agenda as you go through. If you're journaling through, you're going to keep something online. So when I say online, I mean accessible anywhere and everywhere. So obviously password protected. If it's two-factor authenticator, I use something like Google Drive, so Google Sheets, Google Docs for keeping notes, keeping detailed logs, keeping almost like a sheet by sheet, a monthly planner. Basically, here are my income, here's my expenses, here are some strategies for next month, this is what's coming up, who I need to hire, where funds need to be allocated, who do I need to repay, if it's the government, they're paying the taxman his share, his or her share. Basically, it's how you manage your monthly expenditure and your income and where everything goes. So when it comes to managing your business, managing as though you're a large corporation, the whole notion with a listed company is actually the notion is to maximize shareholders' wealth with the deployment of scarce resources and allocating capital to where it will yield the most benefit to its shareholders. So we're dealing with ourselves as an individual shareholder, an individual business owner, as a sole trader. We want to maintain transparency with ourselves and seek that clarity. So in those moments where we have clarity, it's not clouded by the business, the ego that could slip in when things are going well, and also the fear when things aren't going well. We want to have that clarity and to ready the ship. So hence why number one is managing your small business as though it's a large business will give you that clarity. And I'm talking like going through your cash flow. So what I'd like to do is start off with your actual expenses, what you have right now, all the way from, A to Z. So when I think about a P&L, when I say P&L, I mean a profit and loss. I'm talking anywhere from like A to being accounting fees all the way down to Z, whatever Z stands for. But basically, wages and salaries, etc., all the way down. I want you to map that out into a spreadsheet, into a column, and list it all out. And by doing so, these are all your actual expenses, things that are going out of your business. And on top of that, below the line, I want you to factor in expenses that you'll need to add in as you grow, or things that you'll need to be embarking on pretty soon over the next few months, and factor these in. Doing so, you're actually going to be generating a budget. So you'll be dedicating this exercise towards pulling together all your expenses. Forget income for now. I want to narrow this down and look at where you're investing your funds, how you're deploying your funds in order to produce the revenue, and is there any value in delivering it to your customer or client base, and whether it is a smart decision for allocating those resources. So I talked about earlier about managing even those smaller subscriptions. They all add up, over time. So by doing so, we're going to be getting a true picture of your overall monthly expenditure, and we're going to have a spreadsheet, like almost a HQ of where you're going to keep these, and we're going to actually compare them as we go through each month, each quarter. So as part of these expenses, I also want you to list down the items that will be not necessarily expense in your profit and loss. So profit and loss actually comprises, your trading, your operational activities, how you've conducted yourself. But there's these balance sheet items. And what I mean by balance sheet items, that these are like, credit card repayments that if you've got some credit card debt that you're repaying as part of your business, you're paying money to the government, part of taxation, funds that you've collected on behalf, from the customer that you need to then remit back to the government body. And repayments on if you've got leases or more chattel mortgages on plant and equipment, etc. I want you to list these out because this forms part of your cash flow, your cash outflows. By doing so, we're getting a picture of not just your profit and loss, but things that you're paying back or investing in. So if it's assets, etc. By doing so, we're actually going to get a really good picture of your monthly outgoings in terms of your overall picture. And we're going to actually see everything from a high level. And again, these are your necessary expenses. And I want you to note down next to it if it's necessary, if it's something that you'd need to wind up, and have a look at that. Anything that you've got going towards, say it's a credit card or a chattel mortgage, a lease, etc. I want you to note also next to those items that you've listed, whether what the interest rate actually is on that, and how it's being used and to what benefit. For example, if you've got a forklift in your business and you're paying that back and you're paying 6% to the finance company, and it's being used to take in deliveries for your small business, your grocery store, your tile shop, whatever it is. I want you to note that down. Is it being utilized? Is it worthwhile? Either, put some notes next to it, because this will actually help you substantiate necessary expenditure, things that you haven't accumulated over time that you're blindsided by, whether they've got a worthwhile use of deploying. Remember, you're a large company and you're at the scrutiny of the shareholders. Your share price depends on it. So by thinking like this, you're thinking like a methodical, sensible person, and you're going to go through everything with limited emotion. You're going to see it all through the eyes of how can I maximize the benefit and the value to my customers, to my clients, but also in turn maximize the benefit to the beneficiaries of the shareholders of your own enterprise. So again, we're going to recap that aspect. Is we're going to be treating it like you're a large company. We're going to be formulating our cash flow, firstly starting off our expenses, your profit and loss, then also including as part of that the repayments, the capital repayments that will be on the balance sheet, whether it's loan repayments, credit card repayments, etc. Respect the small amounts for the large amounts to compound over time. Okay, so tip number 2, we want to understand the laws of structuring. So we want to factor in the concept that we all have a marginal tax rate. So particularly in the United States and Australia, we as individual taxpayers, we all have a marginal tax rate that will be applied. And what I mean by marginal, it's basically depicted on the more money you earn, the higher the rate, the percentage that you would pay, up to obviously a cap, because it would be capped out. It's not like you'd earn, $1 trillion and your tax percentage goes up to 99.9999%. In war times, there's been instances where the tax rate goes up to almost 90% plus, I think. But obviously out of war and, normal business as usual times, this marginal rate gets capped, right? So there's also a benefit of the less money you earn individually, the less percentage tax that you'll pay. Now, I want you to keep that in mind with the laws of structuring. Now, the laws of structuring isn't to avoid tax. In my mind, paying tax is good. It thrives into the system. You're putting it into the, obviously where those funds get invested, deployed as part of that government side is another story. But I see it as a good thing because you're basically giving back to that, that community, that country of your origin, wherever you're set up. And we're living in abundant times. We have all the infrastructure that we need. We have everything. We have a marketplace to deliver those goods or services. And it's an abundant way of thinking. You pay tax, just be grateful for the opportunity to actually conduct business in that area. And when you are paying tax, see it as you're also reaping the rewards in your overall community, in your city, your town, wherever you're placed. It's going to come back to. It's going to go to people that we need it. Ignore the noise of misallocation, whatever, or the negativity around that notion of paying paying any form of taxes. Otherwise we wouldn't be able to have these privileges of being in the country, right? So that's a huge part of this. It's blends in with a bit of mindset as money management for small business, but also I want you to be grateful when expenses are going out, because again, when you've done that step number one, we looked at where all your expenses goes, whether it's expenses in the business, putting them in to generate your revenue, your income, all the way through to paying the tax authorities. Be grateful for where those funds are going, because there's a high purpose to where they're going. There's a meaning behind it. So going back to this marginal tax rate that I was referring to at an individual level, like I said, the lower you earn, the smaller the percentage of tax you'll pay. The higher you earn, the higher the percentage, up to a cap at an individual level. Now, structuring allows you a huge asterisk on this, because a lot of barbecue chat basically gives off the notion that the circumstances that you've been advised by a professional is just blanket across the board. It's relevant for everyone. That is not the case. Everyone has a different set of circumstances and a different strategy, a different set of rules they need to oblige by. So please, please, please get independent advice on your circumstances. Don't just rely on YouTube, including me. I'm an accountant by trade. I've gone through the Institute of Chartered Accountants. I've done my CA program, obviously being a chartered accountant, but in no way, shape or form I can give you tailored individual tax advice or structuring advice or even business advice. Seek out someone who's a professional, engage them, look them up, make sure they're credible, make sure you trust them, and seek out your own advice. Please don't rely on advice from barbecue chats or listen to people bragging. There's going to be a time it's going to come out in the wash. If they're avoiding it altogether, let them just acknowledge it. If they're bragging about or saying, "Oh no, you should be doing it this way," just smile and nod and just respectfully just say each circumstance is unique. And what I mean by unique is when we have structuring, you can structure your way in a way that will benefit you from being sued by third parties, by your clients, by suppliers, by stakeholders, by competitors, by the general public, etc. But that's in a way it's called asset protection. There's another benefit of tax minimization, of having a tax benefit of structuring your business in a certain way. So depending on your country, and again, seek advice, but give you a few examples. But there's an entity you can set up, and it's not just companies. There are a variety of different entities, and they can get complicated. And you have to factor in compliance costs, the cost of setup, actually having it and understanding how it works, respecting it, because we're dealing with fire in some ways, especially when you're dealing with taxation authorities, and you don't want to be avoiding tax, but you also don't want to be paying over and above what you're supposed to be. Right? You want to just have an efficient allocation of everything, efficient of where you spend your money, and an efficient way of how you pay the money that is fairly owed on what you've earned, the net earnings, to the taxation authorities, so they can invest it back into the community, into the country, and get stronger. So when it comes to this, we want to factor in that certain structures actually have a lower tax rate than it would if you had in your individual capacity as an individual taxpayer. So let's say at an individual level, let's round up the tax rate at 47%. And at a company level, let's cap it at 25%. So I'll give you an example. So let's say your business makes $1 million net profit, which is amazing. Congratulations. But when it comes to the tax, if you're running it in your individual business at an individual level, rather than a structure, rather than a corporation in set up, or a different entity, you're just doing it as a sole trader, as a solopreneur, you'll be paying top marginal tax rate, basically. So let's call that 47%. So you'll be paying $470,000 to the taxation authority, leaving $530,000 left over for you to invest, to put back into the business, to buy property, invest, whatever you want to do. On the other side, if you had that corporation set up, let's call it, again, just get some proper advice on this, but this is just for example, can pay as low as 25% if you have that structure in place. And on that $1 million, you'll be paying $250,000 to the taxation authority of your country. And then again, leaving $750,000 left over, again, for you to utilize. Now, the huge asterisk on this, because this all depends on, once you've paid that to, at a company, if you're in a company and you're paying that 25%, the company pays that, but then you need to work out a way to actually pull that out to yourself. So because you've paid that $250,000 over to the taxation authority, there's this concept called franking credits. Now, in Australia particularly, that's what they're referred to as. And when you pay out a dividend now to the shareholder, which is, again, you and your family, you can actually get a benefit of the taxation already paid. So if you can manage your income at an individual level to be lower, to live within your means, not have too many outgoings, and live off a smaller amount, you can actually deploy your resources in a structure to have a favorable tax benefit, but have those funds invested at a productive level and actually get a good yield, a good percentage return, and manage your tax. Now, on the other side of the coin, you also want to manage the risk and protect your assets. So it's intelligent to actually have those funds come out of the business and keep them protected in a certain way. Again, get legal advice, get taxation advice on this for your individual circumstances. I'm just giving you a hypothetical example of that, how that works. But again, structuring 101, you want to be sure that you're actually doing that in the most favorable benefit for yourself, and understand the laws of structuring and where it's beneficial. Now, the asterisk I referred to before on this, the disclaimer, is to understand whether or not the entity will actually do anything for you and as to be a favorable result. So what I mean by that is there's certain people who generate a good income that they can't have their income be put through a company. The tax authority actually requires you to be assessed at your individual level. And in Australia, they refer to this as, personal services income. It's based on your personal services rendered that you're receiving this. It's not a profit off, selling a product at scale or a service at scale and receiving that huge lump sum that it's not from your personal services rendered. So huge asterisks on that. Make sure you check the rules. I'm going to put in here some reading, some further material just to check, but also obviously engage a professional to make sure that you're getting structured correctly. You don't want to be doing it yourself. Just be sure that you're doing it right. Now, you've got to be treating yourself as, so whether you're a solopreneur or, if you've got a company, you've got a different structure, you want to be treating as though, like I was referring to, as you're a large company. So if you're a solopreneur, but what I mean by that is you want to have separate bank accounts for your business operations. You want to have, if you have a credit card, have a separate proper business credit card. I think in the United States, they refer to it as doing business as, have a registered name. In Australia, you have an Australian business number, an ABN. So it'll be attached to you individually, and you can attach a business name to it. So then you can set up with your financial institution, your bank accounts having in the name of your business. So everything's clean, everything's transparent. It's so clean that you can basically have one account and you see everything going through it. If you need to put some funds into your business, you put it into that bank account, and then you pay the subscriptions, your suppliers, etc., your marketing expenditure, whatever it is, out of that one bank account. Keeping it clean, having that trading account. Having another account, and again, talking to your bank to make sure they waive any fees, the monthly fees on it, but having some funds set aside so you can be very, again, clean with your funds of how being set aside. Now, we talked about that cash flow, those outgoings that we referred to. So at the end of each month or week, even if you want to, actually set funds aside to who you owe at any point in time. And I always refer to it as, if you're doing business, DBA, if you're doing business as an individual level, as a solopreneur, as a sole trader, versus a corporation, you've got a corporate setup. Set the funds aside that you owe the tax authorities at every point in time. So your account that is left, like your trading account that's left there, that's actually just a concept of, once I pay everyone I owe, these are the amounts, this is the amount left over that notionally that is due to me. By having a separate account, you're actually transferring amounts that for income tax, for your company tax or income tax, over to that. So let's come up with a notional figure, like call it 30%, 35% on your net profit. Again, we'll do some calcs and I'll show you roughly how to actually set that aside. But also the sales tax. So in Australia, they call it goods and services tax, and other international countries, they call it VAT. Depending on your country, being mindful of who you actually need to remit this back to. So what I like to do is, it's generally your total income plus, the sales tax that is on top of that. The sales tax that you owe is less the amounts that are eligible expenses that also have that tax imposed on it. That net amount is what you have to remit to the authority. So I like to actually have that into the other account, park that aside, and that account is purely for paying regulatory authorities, paying the tax on what you're owing at any point in time. So then you don't feel as though your account is inflated, that you have this false sense of security that you're like, oh, I've got this huge amount. You feel rich for the most of the month or the quarter until you have to pay that. And that's how a lot of businesses get in trouble. And one supplier that I love to keep on my side at all times is your taxation authority. Just keeping on top of those payments, especially now in these economic times, especially going through COVID. Basically, the taxation authorities, their income is basically tax revenue. So they'll be doing whatever they can. They'll be deploying resources to do audits, to actually pull money out. They actually legally, in some countries, can actually get their hand into the account and pull the money out that they're owed. they actually can contact the bank. So just be mindful of that. But keeping them on side, doing everything in your power to keep them on side, will be beneficial to your going concern, your continued operations, and your stress levels. You're just going to be knowing that whatever you need to pay is set aside in this other account. Now, this also, they refer to, IRAs. In Australia, they call it, superannuation. If you pay employees or you pay yourself, you'll also owe yourself, that superannuation, that retirement savings, that a legal requirement is required to be paid. That also, I enjoy having that set aside. You don't want to actually have that in your account. You want that to have that in your separate other bank account that you can, negotiate with your bank to see if you can get a small interest. When I say small, that's what they'll prefer to do, but get the highest interest rate you can. That is at little to zero. When I say little, at no risk. Everything has risk, even banks have risk, but have it at the least amount of risk possible and get at least a return on it, a percentage. If it's 3-4%, amazing. Because those funds that you set aside are periodically have to be remitted back to those taxation authorities or the super funds, the retirement accounts for your employees and yourself. So I like to have those three elements in there. Depending on how big you are, there's a few other things to factor in. So like examples are like payroll tax, if you have a huge wage bill that you have to actually pay. But I like to have those three amounts go immediately at that point in time that's on receipt over to that account, and leaving your trading account, leaving it lean. So if you need to chase up people who haven't paid you, you're more at a heightened level. So again, as a small business, you're wearing multiple hats. You're wearing your accounts receivable hat. You're wearing, you're basically a CFO. You're the CEO. You're the chief marketing officer. You're the chief technology officer, even if that means restarting your computer when it freezes up, to developing software. Whatever it is, you're wearing multiple hats. So you want to manage your stress levels as much as possible. And managing your money is so crucial, especially during these times, during growth, during periods of, when you're just starting up to when you're just trading through difficult times. No matter what, it's going to benefit you because you'll know exactly what you owe at any point in time. Ballpark, not exactly. Again, we're factoring these round figures. And once we've paid everything, then everything comes out in the wash and you'll feel a lot better. Now, the next tip I want to talk about is paying yourself. So as a business, we talked about entities. So if you're in a company, for example, you can pay yourself a dividend because you're the shareholder, and imagine. And again, you as a shareholder can also be an entity in itself. So again, I personally like having structures where it's like for my trading companies, like obviously you'll have a company. The shareholder, I have a trust. So it's a discretionary trust, otherwise known as a family trust. And again, depending on the country, it's called different things, different ways of explaining it. But essentially, the trust acts in its capacity. It's basically in holding in trust for its beneficiaries. So a trust has a trustee. So it can be an individual or a corporation. Again, it's going to be confusing, but I'll have a way of actually explaining this alongside the video so we don't lose too many people along the way. But basically it's held in trust on behalf of the beneficiaries of the trust. Now, that actually provides even more flexibility of how to actually deploy funds. You can invest. I like to invest in that trust, but also invest personally at individual level as well. But it gives you benefit of actually having to pull the money out of the company. And again, we've talked about tax and paying that to the taxation authority. You can actually have that tax go into, that you've already paid, the credit, go into your trust and actually have that come out. Again, get advice. This is just general guidance on how this works. Look up the most, the relevant content for in your country and do your research accordingly, and then go engage a professional to make sure. But one way is in an entity, you can pay yourself a dividend, you can pay yourself a salary, or like a management fee or director's fee or consulting fee, etc. So there's different ways to actually pull money out of the business. and you want to make sure you have a strategy in place ahead of time. So when you've got your business, you basically want to treat it like a startup. I call it bootstrapping initially. So we like to pay ourselves eventually. We want to be able to determine what you're owed and actually have yourself being owed a certain value. You can have it set aside, another bank account, having notional amounts set aside. Then you can treat that to be like, okay, rather than me take it personally, I want to put this back into the business, buy some more plant and equipment. I want to buy laptops, computers, equipment, whatever you want to do. Spend it on marketing, put it back into the engine that will actually run your business. You can choose what you want to do that, but having this notional pay yourself first is really beneficial, especially when I say you want to be put aside the funds that you pay the taxation authorities, then set funds aside to pay yourself, and have the rest left over for paying operations, and you want to build that up as much as you can, basically depicting your profitability, your net profit, your net result of operations left in your trading account at the end of the day. Okay, so when it comes to actually paying the taxation authorities, I like to have this fictional way of seeing it as though I immediately have another shareholder in my business operations. So I basically instantly have someone who has 25% of my business, up to 30% or whatever the tax is in a company. Or as an individual, I think that the country also is a shareholder, like the shareholder in me. So I have to pay the country their cut and I receive the rest. In a corporation, the same way. Basically the country has a percentage of my profit, and that's fine. That's because we're actually serving the country, serving the marketplace as a notional thing. But I like to immediately think that no matter what business you set up, you're never 100% shareholder. Like, even though you are on paper and legally you're 100%, but theoretically you're 75%. Let's just call it, for simplicity, let's just pretend. Because by having this mindset, you automatically surrender to the fact that you're not going to have every dollar in that account as yours. You need to pay your creditors, so the people you owe, your suppliers, and you need to pay everyone, tax regulatory bodies, your suppliers, your vendors, everyone. And then what's left over is then split between the shareholder I said, the instant shareholder. As soon as you set up that business, you have that tax authority, the country that you're paying that tax to, and the rest is yours. By having this mindset, it allows you to actually set funds aside strategically, and realize that having this account that I referred to, paying yourself, that another account that I mentioned, having those funds set aside, you're actually factoring in those funds. So you're almost like going 25% for you, 75% for me, and have that other account set aside for what you need to actually allocate. Okay, so paying yourself requires you to understand your marginal tax rate, what you're earning, and understand your personal circumstances as well. So what are you and your spouse investing in? Do you have a house? You're about to buy a house? Do you need to actually have some good personal finance? Do you need to show a bank something, like in terms of your overall income? You want to factor in what your income should be, but you also don't want it to be exorbitantly high, so high that it's becoming inefficient of how you're actually paying that tax on your marginal rate. You want to always keep your individual level at an efficient level. So you can utilize structures, if need be, of actually how to actually have those funds come in. So paying yourself relies on understanding your personal position, understanding what you need to be earning, and to keep it efficient, and then actually reverse engineering the best way to actually have that come out to you personally. So again, dividend, if you're earning a salary, giving you an example, you can pay yourself call it $80,000 salary, have everything else left in the company that be, paid at taxation, like you paid that tax. Because when you pay your salary, you pay yourself your salary. It's a deduction. It's a expense of the company. But also on top of that, you need to pay yourself that of value. So we talked about like superannuation, or like in terms of the IRA, that you actually transfer those funds across to. Whatever's left over at the end in the company, you pay it at the company tax rate. But that salary that you're earning, typically, it depends on the country again, but in Australia, the company remits the tax on your salary to the tax authority. So when you receive your salary, you receive it net. Like, you basically, whatever hits your account, you're like, you don't have to pay any more until you lodge your tax return. So that's your money. From a bank standpoint, when they're assessing you personally, if you want to buy a home, you want to do different things, you want to buy a jet ski, a boat, or you want to do something, get another loan for something, you're getting judged based on your income that you earn. You want to actually look at that from a standpoint of, okay, what am I looking at here? So hopefully this is making sense. So whatever's left in the company, you can actually pay that out via dividend, have it go into that structure, or, if you're just a solopreneur, you have those separate accounts set up, okay? So dividend, salary, and then there's a director's fee or a management fee or a consultant's fee. The reason why I refer to it as different things, it depends on the structure. So if you're a company, you typically would be a director of the company, the corporation that you've set up, or an office holder. So you can actually earn a director's fee on your fulfilling your director's duties to actually directing this company, or you can receive a management fee, consulting, again, however way you want to do it. That'll go back to you individually as well. So no matter what way you want to do it, you want to have some balance and actually factor in the best way to actually conduct this. The final tip I want to give for money management for small business is, we refer to it right at the start of having this budget and this cash flow. And I want you to actually set boundaries and ensure you deployed a strategy of the clarity that you attained when you had it, when life gets busy and gets in the way. Now, we referred to this at the very start. And the reason why it's my final tip, and I've sandwiched it in between all these prudent ways to actually manage the cash flow, actually conducting your business in such a way, is having this done in a certain way. So when we have clarity, we actually have an intelligent way of actually looking at the world, how you look at the marketplace, how you see your ideal client, how you serve them as a customer, their pain points, looking at opportunities, understanding your competitors, understanding where you can add value, and understanding what it takes to produce that value, whether it's a product or a service, how much that will cost, how long it will take. You're getting clarity when it comes to it. You want to deploy a strategy that's intelligent. Now, when you have the budget and the cash flow, those funds that you need to invest in, for example, you come up with a new service, let's say it's an online course, and you want to market that course, and it's going to cost money in terms of marketing expenses to produce an income on that course quickly. So when it comes to that strategy, don't allow your bank account to be reflective of, okay, we're making money from our existing operations. I just went down to the beach. I saw people on jet skis and fishing on a boat. I really want to buy a boat. You're losing clarity of what you had in mind when you deployed your strategy. So when you deploy your strategy, when you come up with your strategy and deploy your strategy, you want to actually have a balanced way of llooking at it. What you want to pay yourself, and also what you want to invest, and what's the next product or service that you want to deploy, and have a very strict rule of, okay, I want to invest $5,000 in the marketing of this and producing this product. But also, I want to pull out, $1,000 for myself via dividend. And we always wanted to buy this, secondhand jet ski. We really want to enjoy this summer that's coming up, or winter, depending on the country again. In Australia right now, it's super hot around Christmas time, and I know in the US, it's basically very cold. So when we refer to our summer, we're referring to our summer right now, and your summer would be midway during the year. So depending on where you want to actually get that inspiration from, and where you want to actually get excited about that future, have those boundaries and ensure you deploy your strategy. Is basically what I want to get at, is try not to deviate away from clarity, because at one point in time you had the clarity, it made sense, and you want to execute your strategy. And if it goes great, amazing. And if it doesn't, then you learn your lessons and look at how to tweak things, and be aligned with how you approach it. And again, we referred to it as though you're dealing with a large corporation. You're almost having these meetings, there's minutes of meetings with yourself, an agenda, list of an agenda to go through, actually how we're doing, what we're going to be working on next month, next quarter, what we're going to be producing, what's the next product we're going to do, how we're going to deliver more value than anyone else can, and manage our business properly. But also, we don't want to just come to next month and just go, screw this, let's just blow this all on, put it all on crypto and go to the casino and buy, five new jet skis. You want to actually be intelligent of how you deploy. Again, pretending like you're a large corporation, you're at the scrutiny of the shareholders. You're basically at the scrutiny of your most highest self, the person within you that has, your future self that's basically going, can you treat this seriously? Because you're actually going to blow our abundance away. You're disrespecting these funds that you've worked hard towards, and you've lost clarity. You're basically having this, rather than delayed gratification, you're giving yourself immediate gratification based on this emotional roller coaster that you might be enduring and wanting just to, splurge. So set a budget, a cash flow, set the boundaries, ensure you deploy it, and make sure you enjoy it. When you have the clarity, life can get busy, can get in the way, and having this strategy, having a Google Sheets document that tracks everything, and you go through your funds that you need to set aside, knowing what you have left over, knowing what's for pleasure, what's for fun, what's for, back into the business, which is equally just as exciting if you're enjoying the journey along the way, can actually make a more prudent, a more abundant lifestyle for yourself, in your business, for you personally, and factoring in all these tips to deploy. Now, I want to wish you luck, abundance, good health, everything. I wish you an amazing year. I hope this video was helpful. If it was, please leave a comment, and I'll see you in the next one.